Top Picks is brought to you by Questrade, where you can trade stocks from 1 cent and buy ETFs for free.
Okay, where to play the markets now? It's time for Top Picks. The first one here is Texas Instruments.
Yeah. So I said earlier, we really like semiconductors. We really like the theme, the Internet of Things. Texas Instruments makes semiconductors that get sold into auto, industrials, personal electronics, communications equipment. And often they're specialized semiconductors that get designed in and might be there for 5 years or 7 years to have a dominant position. 60% profit margins.
Wow.
And they have grown their dividend over 20% a year for the last 5 years. So this is a company that has a very dominant position with long life products. And if you believe that we are going to continue to become more and more connected through our cars, through our devices, then Texas Instruments is really at the center of that theme and likely to perform very well.
All right, so from feeling good about semiconductors to perhaps your home and painting it, Sherwin-Williams, what's the play here?
So look, we really like the U.S. economy, for one. 80% of Sherwin-Williams revenues come from the U.S. Domestic economy. The housing industry is improving. Consumer confidence just hit new highs. They have recently made an acquisition of Valspar, which was the number 4 paint company, so they'll have an opportunity to cut costs and fold that business in. If you think that the consumer can continue to improve, and if you think the 9 million people living in their parents' basements may at some point buy homes, the millennials, which they're starting to do, then the housing industry is a very important industry for the U.S., and Sherwin-Williams is a great entree into home improvement and renovation.
Well, if they're still living in their basements, perhaps
maybe they're painting the basements.
Maybe, yeah, exactly. Or perhaps they're going to McDonald's, and that brings us to our final pick here.
Yeah, this is for the defensive investor. You get 2 themes here. You get the consumer, and you also get real estate. So at the consumer level, you've got 20 states that have raised minimum wage, expanding the cash that demographic has to spend. McDonald plays into that demographic. They're coming off improving same-store sales. The all-day breakfast has been really successful for them. But as importantly, this really is the biggest REIT in the world. They own...
You don't often hear people talk about McDonald's like that.
It really is. I mean, the franchisees pay rent on these properties, and McDonald's just collects it. And there's not a lot talked about that, but really it's like a large REIT. So they've grown their dividend about 8% a year over the last 5 years. It's a very predictable business, very strong balance sheet, and would play well into the consumer staples, low volatility crowd.
And just briefly, because you buy these and then we don't get to catch up for another year, how long do you look at each of these top picks in terms of holding them for?
So every position we invest in, we identify a price below the price we've paid, where if it doesn't work, we get stopped out.
Okay.
We'll make little mistakes. We won't stay in something that doesn't work. We hope all of these will be long-term investments, and I would expect the next 12 months can be pretty good for equities. So I think that it's unlikely we get to a significant cash weight anytime soon. So I think these could be in the portfolio for a while.
All right. Well, we will check back in on those in a year. And as you said, you've been on here for about 15 years. And you're the most bullish in that time. So thanks so much, David, for your candor and your insight today.
Thanks very much for having me.
And that does it for this edition of Market Call. We'll see you tomorrow.